Okay guys, welcome back to the channel. This video will just be a recap of my Sunday analysis because some guys reached out to me to explain some stuff, and I think this will be a very quick rundown just to go over how I got my bias on AUDUSD and USDJPY and what's it called, GBPUSD. As stated earlier, I'm very much bearish on the dollar this week, so I'll just do this recap of the analysis and how I refined these trades as quick as possible. So first off, I'll just go to barchart.com, and any need to go to barchart.com. Nah, no need. I think I already have what I need in my Telegram channel. The Telegram channel is actually private. I created it to keep record, like for record keeping. So anything that interests me, anything I notice, anything I want to, like, anything I know is really serious and related to my trading, I save it in this Telegram channel. It's private, as you can see. It's only one subscriber, just me. It's this trading journal, my trading journal. So this is okay, this is the pound. Let me start with the COT report for the dollar. Okay, so this is the COT report for the dollar. As we can see, we have 44,717 shorts by the commercials on the dollar. So that is where I got my bearish bias on the dollar. And then if you go to the pound, even though we had 71,000 longs by the commercials last week, and that number has reduced to 49,516 longs by the commercial from last week, we are still bullish on the pound, because you see the negative values. These negative values simply means shorts, and they will, like, the numbers without negative in front means long position. So as you can see, the small speculators, these are like the retail traders. Generally they are wrong about everything. That's why 90% of retail traders fail. And you can also see the large speculators like the hedge funds, they are also short on the British pound. But the commercials, these are the banks, the big banks, the people that actually make the forex market, where the money is. Those are the commercials. And what the commercials do is that they actually hedge their risks. Like, they actually hedge, they are not in the market for the profit. It's actually the large speculators that are in the market for the profit. But the duty of the commercials is to actually maintain the economy, like hedge their institutions against loss. So they are the ones pumping the money into the markets. They are the market makers. Like, the commercials are the market makers. So what you should be concerned is this red line. They are the commercials. They make the market. They call the big shots. So as you can see here, the commercials are 49,516 longs on the pound. You don't want to go against the commercial with your 1k, 10k, 100k account. You go blow up. So you have to go in line with the commercials. So the commercials are 49,516 longs on the pound, and then the commercials are 44,717 short on the dollar. So for GBPUSD, we have a bias. We are short on GBP. We are long on GBPUSD. We are longing the dollar. We are longing the pound and shorting the dollar, because here you can see we are short on the dollar, and if you go back, we are long on the pound. Then the next currency we are going to look at is the Japanese yen. You can see that we have 84,744 longs on the Japanese yen. This number is so fucking huge. And then I'm going to surprise you with the Australian dollar. Look at this. This is 100,809 longs by the commercials on the Australian dollar. So we are looking at a very bullish Australian dollar, a very bullish Japanese yen, a kind of bullish pound, and a weak dollar. So we are bearish on the dollar, and for the Australian dollar, we are bearish on the US dollar, we are bullish on the Australian dollar, we are bullish on the British pound, and we are bullish on the Japanese yen. So we have 1 weak pair and 1 weak currency and 3 strong currencies, which give us 3 total pairs, 3 pairs to trade in total. So GBPUSD, we are longs, AUDUSD, we are longs, and then USDJPY, we are shorts. So that's how I created my bias for this week. And I have to add, I'm no longer a day trader. Like, I've been studying this concept since I think last year December, and the concept fucking works week after week. I think this has been about 4 to 5 weeks in a row, and I want to make sure I test this COT concept for the rest of January if it works every week. Like when I'm trading, I'm no longer looking at how the day will close apart from Monday, because if I'm bullish on a pair, like for that week, if I'm bullish on, let's say, AUDUSD, if I'm bullish for that week, what I want to see on Monday is for price to be bearish on Monday, like AUDUSD, right? Let me just use this illustration. This is my weekly outlook for AUDUSD. This is my weekly outlook. I'm bullish on AUDUSD. I have to slow down and explain these concepts very well. I'm bullish on AUDUSD. But when market opens on Monday, I am not just straight bullish. If you study your candlestick patterns, you know that you have the price open, you have the high, you have the low, and then let's say you have the close. So typically, okay, let me use where is this drawing to? Yeah, okay, let me use this. Typically, this is what your candlestick looks like. Yeah, this is what your candlestick always looks like. Let me delete that. Yeah, okay. So this, what you see right here, is a typical candlestick. Yeah, and this candlestick can be a daily, a weekly, a monthly candlestick. It doesn't matter. So the anatomy of a candlestick: you have the open, you have the close, you have the week high, and then you have the week low. So if I'm bullish on AUDUSD, I'm not just expecting price to open on Monday and then push up. What I'm expecting for price to do is actually open here. I think I need a drawing tool here. Let me get one of these tools. So what I'm looking for price to do is open, use Monday to push down, then by Tuesday London open. If I'm bullish for that week, I'm expecting by Tuesday London open, the low of that week should have been that weekly candle should have been created before price push to the upside, and then give us a week high maybe on Wednesday, Thursday, and then give us a retracement maybe by Friday to close as a bullish candle. I hope you understand what I'm saying here. What I'm simply saying is, as the market is opening, the weekly candle is opening. Because I'm bullish doesn't mean the candle will go bullish. The candle has to open, push down, give us a week low, and then reverse by Tuesday morning, and then start the bullish movement to the upside to give us a week high. And if you are trading candles, maybe you are trading the daily candle, like if you want to be bullish for that day, the best place to buy is below the opening price, or exactly as the opening price. You can't say you are bullish for that day and then you are buying maybe above the opening price for that day, or you are bullish for that week and you are buying above the opening price for that week. This here is the opening price. So as the week is starting on Monday, you want price to open and then push down to give you discount price. You buy at discount price. You buy at the discount price, which is below the open of that week, and then price retraces, and then as soon as price is going bullish and passes the opening price, from where you bought at discount price, you're already in profit. You get, buying at discount price gives you profit, and then you close your week bullish. Maybe your take profit can be previous daily high or previous weekly high, but for here I think my take profits for this pair, my take profit is this high, the high at 7260 psychological level. That's my take profit for the week, and this is about a 9.2 risk reward ratio. It could be more, but to keep my stop loss safe, it's giving me this risk reward ratio. As you can see, where price tapped us in at this level. If I should reduce my stop loss, look at that, we can even get a 12 to 1 or 14 to 1, but it doesn't matter as long as you are profitable. You get, so Understanding this candlestick anatomy, yeah, understanding this candlestick anatomy, I'll just go straight into how I refined this trade to get this entry. As you can see here, this is last week. This candle here is let me use the daily chart so that it will be easier, and then zoom this in. This candle here is Monday's candle. What's today? Today is Tuesday, Abby. Today is Tuesday. Yeah, this candle is Monday candle. See how the candle opened and then pushed down to give us a weekly low at this level, and then rejected at our entry. I'll also show you guys how I got these two entries, these two teal lines here, the blue lines. Those are entries. I'll show you how I got these entries. See how price opened, pushed down to give us a weekly low. If I should go to the weekly candle now, you see that that's a week. Look at this week. That's open. Price opened at this level, pushed down to give us this weekly low before reversing to go to the upside. So because you are bullish for the week, doesn't just mean you expect price to open and push up. It can't. It happens sometimes, but on rare cases, like here, look at price just opened, push up, didn't give us a week low. But here, price, if you look at most of the candles, see that they gave us a week low and week highs. So 70% of the time, price has to give us a week high, a week low before giving us the week high if we are bullish. And then if we are bearish, price has to open, give us a week high before giving us a week low and then close. So let me go to the 4-hour to show you guys how I was able to refine this trade. I think I don't know if I should delete this stuff, but I'll need it, so I'll just leave it there and then see what I can do with what we have here. So let me zoom in so that it will be very clear. So using other blocks, before this candle happened, like I don't have this is the free version of TradingView, so I don't have replay mode to go back and show you guys how I got this entry, but let me just do it as roughly as you guys will understand it. So looking at this H4 candle, you can see that this H4 candle was the last bearish candle before we had this bullish move. You get, so this was the last bearish candle before we had this bullish move. So this H4 candle is strong. It's an order block that has not been mitigated yet. So we had this bullish move last week Friday. What I was expecting was for price to come down into this order block, mitigate the orders in this order block, give us a weekly low before pushing to the upside. So we have our order block on the H4, and then I'll jump into the 1 hour. I think our entry was gotten on the 1 hour to show you guys how I refined that entry on the 1 hour. Then I'll delete this H4 order block. Then look at the same candle, even though it's smaller now on the 1 hour. Look at this candle on the 1 hour. Look at that. So this is the other block we were looking at. We are bullish for the week, yes. I think the week this week opened around this level and then pushed up and then retraced to mitigate the orders in this other block, even though it didn't come 50% to the other block. So that was the first way we got our entry. The open and close of this other block, the body of this candle, this bearish candle, the last bearish candle before the bullish move, was what we used. So the open and the close of that candle was what we used as our other block. Then the second way we got our entry was using optimal trade entry, OTE. So how you get that is to take your Fibonacci from the week low to the week high, and then our entries are 60%. So let me put on the level. So our optimal trade entry is always at 0.62%. So I'll just on the level so you guys can see. So look at the 0.62 was our entry, 0.62 here. I think did I use week to week? Yes, I used week to week for this fib. It was week to week. I used not body to body. So you see where our first entry is, the blue line. That's exactly at our 0.62 level, and then our second entry was at the open of this bearish candle. So we had two entries, one here and one here, and as you can see, price took both our entries before moving to the outside. As soon as price started the second entry, this other block, as soon as price came into that other block, we had a rejection straight to the upside, and then price came down a little, even though it didn't get to our other block, and then you can see the rejection from that level. Even with that, we still had those that were waiting for, okay, let's say you waited for a second entry, we still had another entry at this level. Look at this, 0.62 gave us an entry. Price didn't reach the full 100% retracement, so you could still use this level 0.62 here as your entry, and then stop loss just below the 100% level, and a target for the week high. You see how a 4.7 risk reward ratio. So that is how we got our 2 entries. Then I take profit target. This is a first take profit target at 0.71875. I think first take profit target has been smashed. Let me measure the pip range. That's for 38 pips. We already had a first take profit target, and as you can see here, price is racing to our second take profit target at 0.72200. And I think before we get maybe by tomorrow, Wednesday, we will be able to close our second take profit targets. Then our last take profit target will be this level here, which is close to this is last week's high, this is last week's low. So that will be very close to last week's high, and it's very probable because there'll be a lot. Look at this level, there'll be a lot of liquidity, like sell side liquidity sitting, buy side liquidity sitting, buy side or sell side, okay, I don't know. So there'll be a lot of liquidity sitting at this level, like people that sold at this level with their stop loss here. There'll be liquidity sitting at this level, so I'm expecting price to come as far as this last week's high, but keeping our take profit here is very, very safe. So that's how I refined this trade. And okay, like I don't want it to be as if I draw this stuff after we already had our entry and everything. Let me go back to my trading journal and show you guys. This is it. Look at the comments here. AUSD refined. When did I post this? I think this was when was this? January 10. Where is 10? Okay, January 10. When was that? Let me check the time. 12:39 a.m. That was in the night, like Sunday opening Monday. That was when I posted this stuff on my trading journal. So I had to refine it that night, then send it to my trading journal. I also posted an idea. I posted an idea on TradingView, but I made it private. Look at it. I'll play the idea. So look at where we were. Like we hadn't even come to our entry. So COT report shows dollar weakness and bullish Aussie. Therefore, we should be expecting bullish movements on Aussie dollar this week, refining to the H1 order block for our entry and aiming for old weekly high, this level, old weekly high, and aiming for old weekly swing highs for 100+ pips. So I'm just going to play this so you see how it played out. Let it not be like, okay, I plotted everything after we already had our entry. It was published. What was the time I published this stuff? January 10. They didn't add the time. Okay, Service made the comments here. They didn't add the time, but it was on January 10. So you could see it. Let me even like look at this. This was 12 midnight. That was Sunday breaking Monday. So that's how I refined Aussie dollar. I think the second one was USDJPY. I didn't really do much on the pound, even though I said I was expecting price to break 3600, which it has, and I'm aiming for 3700. I think that range is about 100 pips. So price has broken 3600, and you can see the strong bullish pressure. If I should zoom this stuff, you can see the movement to the upside. I don't see any reason why anybody should be selling this market, even though on the weekly chart we are very much, the weekly chart is bearish to the downside. Look at this. I'm coming. Look at this bearish pressure to the downside. But I following the previous week's COT report, we have been having very bullish pound. So I'm expecting pound to come to at least 3700 before we'll see a reversal to the downside. So if I should go back to the daily chart, daily, the H4, so look at this bullish momentum all the way from this level. I think this move, the total move is about 500 plus pips, so I don't see any reason why anybody should be selling the pound at this moment, even though the commercials have been shorting, have been reducing their long positions, because we are supposed to be expecting a reversal soon, close to 0.3700. So let me measure the pip range. I think the pip range is about 500 plus pips or more. Yeah, 512 pips. So that's what we are looking at. Price is actually racing to 0.3700 as it stands. So that is it for the British pound US dollar. And then finally we'll be looking at USDJPY. So personally, apart from Aussie dollar, this USDJPY would have been my trade of the week, even though price, like yesterday evening, price failed to reach a take profit, and then you could see this reversal to the upside. And I think the reason for that was that price wanted to mitigate this other block. See this other block we have here, and price has done that, and then as it stands now, we are now racing to the downside to grab the liquidity, resting at this week's low. So personally, this is my trade of the week, the USDJPY, and then at the records now, the USDJPY and then the Aussie dollar. I was really specific on these two pairs because I saw the weakness on the dollar and the amount of bullish pressure that was coming in for the Aussie dollar and the Japanese yen using COT report. So I was very bullish on these two pairs. So for USDJPY, this was where we got our entry. Let me go back to my trading journal so you guys can see it. Look at this, UJ 1250, that's midnight Sunday. So look at this. I was expecting price to come into this level and then reject and aim for this last week's low as a take profit. So let me go back to the chart to show you guys how I got this entry. I think it was on the H4. I think we had an order block on the H4. I'm trying to see where we had that other block. It will be, is it the H1? Yes, the H1. Let me see. Yeah, it was the other block was, I found it on the H1. So look at this bullish candle here, the last bullish candle before a bearish move. This other block had not been mitigated. You can see the price just melted from that level. So I'm bearish on this pair. So I was expecting price to open, push into this level to give us the week high before coming down to last week's low. So as you can see, even though the retracement on the US dollar Japanese yen came in earlier than the retracement on the Aussie dollar, this one came in Wednesday evening, while this retracement already happened before London opened Monday. So London open Monday, we had this retracement. This retracement happened during the Asian session. So we had this retracement, price came, filled in our order block. Like our entry was like the week of this other block. That was our entry. I wasn't even expecting it to reach the 50%, but I think price filled almost 100% of this other block and then melted from that level. Look at this, price just melted. I think, let me see, let me take from my entry, that's about 72 pips. That is fucking massive. So as it stands, price has mitigated this last other block we had here almost 100%, and then price is racing for last week's low at this level. So that's just it. The analysis is not that difficult. Actually, what I look at first, I am not as it stands, I'm not a day trader, or more honestly, like day trading has really done a lot of stuff. It has really done a lot of, like, historically it has done a lot of damage to my trading, because you know what you're looking for in the week, like for that week you know what you're looking for, but then it's not easy to come to the charts every day to know if you want to be bearish or bullish for that day. It's not easy. So like the way I've made it for myself, COT reports, they come in, COT reports come in every Friday. They come in every Friday. I think around by 10 p.m. they should be ready. So once they come in on Friday, they tell you the total amount of longs or shorts on a particular currency for that week, for the next week. So it tells you what the commercials are looking at the next week. So if the commercials are bullish for that week, I don't see any reason why I should be coming to the chart every day to look for maybe a bullish or bearish setup. And then there's this stuff I also learned from ICT. It's called is it time price theory? I think it's time price theory, that if you are supposed to be bullish for a week, for that week, what you want to see is that before 70% of the time Tuesday London open, if you are bullish for that week, the low of that week should have been formed. And if you are bearish for that week, the high of that week should have been formed 70% of the time Tuesday London open. So that's another reason I usually don't trade on Monday, apart from this early trade we had on Monday where price came London open Monday. We already had our order block mitigated. We already had our order block mitigated on UJ, which just sent me a message. It just sent me a message. COT is the goods, my nigga. So what I'm looking at is my new trading concept is check my COT report during the weekend, get my weekly bias. Last week I was bullish on GBPUSD and bearish on Euro GBP because pound was very strong last week, and those two trades played out even though Euro GBP didn't reach a take profit. I think I also talked about that in the last video, but GBPUSD smashed a take profit for, that was I think 0.83, okay, 0.3600 price smashed a take profit last week on GE, but Euro GBP didn't reach a take profit, and as it stands, it's still playing around. This is a take profit here. Price is still playing around. So but we had a good, I think about 60 pips move last week. We had about 60 pips move last week on Euro GBP, and it was fucking massive. Like, it was fucking massive. Just look at this. COT report is the goat, my nigga. So just get your weekly buyers. Swing trade. Like these two trades alone, this is 9.2 risk reward, and then this is 7.35. These two trades, swing it. That's 16% for the week on just two trades. You don't need to come to the chart every day. You don't need to come to the chart every day to look for trades. Just get your weekly buyers. Get your weekly buyers. Wait for your week high and week. If you are bullish, wait for your week lows to form. Maybe around a specific order block. If you are bearish, wait for your week highs to form around a specific order blocks. Around a specific order block. Then man, just set your buy and sell limit, and then just swing the shit out of that pair. Like, swing it. Like, see, all this stuff is noise. See, all these things you see here, they are just noise. We are bearish on this pair, and we are bearish. We don't want to know what happens on a daily basis or news or NF. Man, fuck, NFP didn't even touch a GU last week. NFP didn't touch this pair. We were bullish on this pair last week. I think this was our entry here. Then look at this, is 360. Guy, NFP has nothing on us, man. Just you see, I can't see it's like, to an extent I feel I'm overemphasizing this COT report of a thing, but man, it's the real shit. I posted a video yesterday on WhatsApp where ICT was handling how to find the major moves. Let me open the WhatsApp group so that you guys can see it. And the first stuff he mentioned was COT report. So what's the trading group? Yeah, I think one of these videos, this one. It's this one. It talked about, like, if you want to get a major move in the market, look at your COT report. Man, just swing your sheets. 2 trades, 2 pairs, 2 positions, 16% risk reward, 16 RR for the week. I can't stress it enough. I'm signing out. You guys should have a peaceful week. I think I have handled it enough in this video. So like 29 minutes. I didn't expect it. I didn't expect the video to be this long. So anyhow, you guys should just have a wonderful trading week, man. Just take your time to digest these videos. Just COT reports, other blocks, week high, week low. Wait for your orders to get hits, swing the shit, man. COT report is the good. Shout out to ICT every fucking day. That nigga has changed my trading life, man. Honestly, I actually recommend you guys to watch it. Just search ICT on YouTube and then have a peaceful trading. Yeah, signing out. It's your boy Savior, and I'll be back with more amazing content. Peace.